The second thing I want to talk to you about today has to do with Roth conversions. And we've had episodes where we talked about converting your funds from TSP that are in traditional to Roth or any other type of traditional IRAs that you have outside the government and the benefits of that. And I'm bringing this up because TSP will, in the future, allow you the opportunity to convert some of your traditional money, or all of your traditional money for that matter, to the Roth side. And the benefits of that and why we would do it, I think are obvious. But if you're not familiar with a Roth IRA, what that means, this is a tax-free version of retirement saving. How do you do that? You put in money into a Roth IRA or your Roth TSP after tax, so you pay the taxes up front, and the money accumulates in this account, earns interest based on whatever investment choices that you have. And when you take the money out down the road, the monies will come out tax-free. Now, what if you didn't make that choice right away and you put money into the traditional bucket or have a traditional IRA out there? The traditional side, money's put into that account on a pre-tax basis, meaning you get a tax deduction for any of those contributions that you've made to that account. And in the end, the money will grow tax deferred and grow and grow and grow based on the strategies that you picked. And in the end, you will pay tax on every dollar that you withdraw from that, the money that you put in, plus the interest that you've earned. So on the Roth side, just in general, when do you want to pay taxes? Now or later? I'm a big fan of tax-free dollars in retirement. I'd rather pay tax on my contribution and let it grow and grow and grow. But if you've made a choice and you said, yeah, you know what, I do want to do the Roth side, but I've been contributing to the traditional portion of TSP for my entire career, and I've got a good amount in there. How can I do it, and what are the benefits of moving money into a Roth side? Well, there are ways. The way to do it now is you have to do it outside of TSP. You'd have to move whatever portion into a traditional IRA, and then you can convert from the traditional to the Roth. And going forward, once you do that conversion, all the interest that you earn in the Roth IRA or the Roth portion will grow tax-free, and any income or money that you take out from that account down the road will come out tax-free. The problem with a Roth conversion, if there is one, is that you do have to pay tax on the money that you convert. So whether you do it in the future when it becomes available in TSP or you do it outside of TSP, even though I'm a big fan of it and I like and prefer tax-free dollars in retirement, you've got to understand the consequences of doing a conversion. And what that is you have to pay the tax on whatever you convert. So let's say, here's an example. You have $100,000 that you move out of TSP into a traditional IRA, and you want to convert that now to a Roth. And we can snap our fingers and just go abracadabra, boom, magic trick. We turned money from traditional taxable dollars into a Roth, now tax-free dollars. Awesome. But what's the problem? You're going to have to pay the tax on the $100,000. And depending on your tax bracket, that can be a significant amount of money that you'd have to come out of pocket in order to pay. So if I went traditional money, $100,000, snap my fingers, it's now Roth money, $100,000. At the end of the year, they're going to send me a 1099, and I'm going to owe tax on that $100,000 conversion. It could increase your tax bracket because it counts as earned income for the year in which you converted it. So just understand, you might want to talk to your CPA or tax professional to see how much you can convert before getting into a higher tax bracket. You want to see what the tax implication could be for the conversion. That being said, I am a big believer and a fan of having more tax-free dollars in retirement. Now, why? Why are conversions important? Why do people do them? Because it's a way to prepay Uncle Sam. And if you have a longer time frame before you're going to access this money, then now it gives you an opportunity. Once you convert, all the interest that you earn from that point on, you no longer owe any taxes on, right? So if I paid, let's look at two scenarios. If I had $100,000 today and it's in traditional, and 10 years from now, it grew to $200,000. Now I owe tax on $200,000 when I start taking money out. If I wanted to withdraw, let's just look at an example like that. If I'm going to withdraw all the money, what's my taxable portion of that? So I've got 100,000, 10 years from now, it grows to 200,000. Well, if I kept it in the traditional, yes, I got a tax deduction on all those contributions. I haven't paid tax on it yet. But when I withdraw all that money, I'm going to owe tax on the full amount, the full 200. If I convert today, 100,000, I might pay tax if I'm in a 20% tax bracket on $20,000. So I mean, I'm 20% of that, or I'll have a tax bill for $20,000. So now that 100 could sit for 10 years and it grows to 200,000. Guess what? I don't owe any more tax on any of the interest that I've earned or the gains that I had. So I prepaid Uncle Sam. I got him out of my back pocket for retirement purposes. And going forward, all that money plus the interest that I've earned is tax-free. That's the benefit of the Roth. Now, there's some other rules and some other things to consider. So if you have more questions about that, please reach out to us. I'd like to walk you through the benefits and disadvantages of Roth conversions or having Roth money. But as I said, overall, I'm a big fan of it and it could be beneficial for you. So talk to an expert if it's not us and just ask about, is a Roth conversion beneficial for you? Should you consider that for your future retirement? Because here's another reason why. I really, really like it. Not only is it tax-free and you prepay Uncle Sam, but it doesn't matter then which way taxes go in the future, you're locked in, at least for this amount. Now, we can't avoid all taxes in retirement. You're going to be taxed on your pension and Social Security. But when it comes to your TSP money or your other retirement incomes, we can mitigate the taxes and prepay those taxes. Get Uncle Sam, like I said, out of your pocket. And if taxes go up double what they are now, or they go up significantly, you're not going to have to worry about this amount being taxed too much because you prepaid the taxes. You've got it all taken care of. So that's another reason why I'm a fan of Roth conversions and converting money to tax-free dollars. Thank you for watching the Federal Retirement Show. If you like this clip, make sure you subscribe, get notified whenever we have new content. We look forward to seeing you each and every week on the Federal Retirement Show.